So this entire argument that, hey, you need to have a credit card in order to build a good credit history, it's pointless, right? So please don't believe in that narrative. So let me start today's video by asking you a very interesting question. The question is that how much do you think you are spending on this book? Your obvious answer would be that, hey Akshat, I'm spending 550 rupees on this book because this book costs 550 rupees. You're not wrong, but you have missed a very important point here. So allow me to explain. What you have exhibited is called as first order thinking. So Elon Musk talks a lot about the difference between first order and second order thinking. So the first order thinking means that you're analyzing stuff in a very obvious manner. Here in this book case, what you're doing is that I'm spending 550 rupees and getting this book in return. So my spent is 550 rupees. But that is the incorrect answer. What you also need to exhibit is called as second order. You also need to think about what the long-term benefits of this book would be. You will become intelligent. You will be able to impress a date. You might be able to talk more effectively with your friends. This might give you a business idea. This might help you with your job. When you invest in a book or a course or a mentor, it gives you long-term benefits. So even if you have to take a loan to buy a book, you should do it because the net positive result of buying a book is much more than the money that you're spending on it. So using this principle of second order thinking, I will help you understand whether using a credit card makes sense or not. So let's get started with this video. Now, before I get started on this video, I have two quick points to make. One is that please pause and please like this video because I'm just one person who is going after $1 billion industry, which is credit card industry. So it is not easy for me to do. So would really appreciate your support. And second point is that I just want to give out some disclaimers so that people understand the context more. Number one disclaimer is that this is not a personal attack on you if you hold a credit card. It is completely okay if you are using your credit card wisely, it's fine. Please listen to my arguments also. Hopefully that will give you a better understanding. Number two, I am speaking from personal experience. I am a self-made millionaire and I don't own any credit cards and I never will. So there are 5 specific points that I will make on this video that would hopefully convince you that owning a credit card is actually a bad idea. So the first point is, and it ties into the introduction, that if you hold a credit card, you end up spending more. Now here is a research by NYU and you can take a look at the research. It clearly proves that there were 3 studies that were done that shows that coupons for premium price products can actually make consumers spend more money than they would have spent in the absence of coupons. Now this is a coupon related study, so you might say that, hey Akshat, how does it relate to discounts, cashbacks that we get? Now here there are a couple of things that you need to notice. One is that majority of the people, when they use their credit card, they use to make discretionary purchases. For example, they would buy products like Apple iPhone or Oppo phone or XYZ brand phones and buy mostly durable goods, right? So that is one point. These are similar type of products that this study is pointing out to. And second is that credit card really pushes you to make purchases that you really sometimes do not need. I'll explain this via a story. So I have approximately 6 bank accounts with different banks and I always keep getting these relationship managers who call me up and they keep pushing me to take a credit card because it gives me access to airport lounges. Now I'm a simple guy. When I go to an airport, I don't necessarily need an airport lounge. I am happy just roaming around, just traveling, looking around, observing things. So I'm happy doing it. I don't necessarily need to buy a 300 rupee sandwich at an airport. But the argument that my relationship manager makes is very, very simple. That if you take this credit card, you will get the lounge access for free and you can have free food. But the point is that I go well prepared. When I'm going to the airport, I'm well fed. I don't need to go and buy overpriced stuff at the airport to begin with. Having that lounge access is not really important for me. So the point that I'm trying to drive home here is very simple. That many a times what happens is that when marketing companies who are trying to promote credit cards, they try to offer you services that you don't even need in the first place. But if you have taken the credit card, you would be compelled to keep using their services. You will get into the habit of going to airport lounges and assuming that you're saving insane amount of money because now you're using this credit card and because it gives you access to airport lounges, which is completely incorrect. So this was not a benefit that you were concerned about to begin with. So in summary, what I'm trying to say is very simple, that you need to understand truly what is the difference between first order and second order thinking and how it impacts your financial habits. The first order thinking is very simple, that hey, I'm getting a cashback, I'm getting a discount, I'm getting access to airport lounges, so let me go and buy this stuff. But how does that impact you in the long term? It actually promotes insane spending habit and moves your life from being simplistic to being more materialistic and you spending more and more money. And the worst part is that you actually get the dopamine effect, that every time you go to that airport lounge and you eat that free food, it gives you that sense of accomplishment that, hey, you know what, I use my credit card to get access to this airport lounge. This credit card has been a game changer and it has changed my life, so I'll continue to use it. But honestly, right, it just puts you in a bad habit. Now, I'm not criticizing that people should not use airport lounge. It really depends on your personality, but I hope that you will take the important lesson here, that you really need to identify the difference between first order thinking and second order thinking and ask yourself really that are these the services, the expenses that I need to incur in the first place itself. Now, the second argument against credit card is that it promotes taking bad debts. Now, let me explain this point further by delving deeper into the US credit history and how the consumeristic culture in the US has developed. Very interesting study was done which says that, hey, in the US, approximately 7 out of 10 people have at least one credit card, right? I'll repeat this again, that 7 out of 10 people have at least one credit card. Now, this is insanity, right? That means that approximately there are hundreds of people who would have 2 to 3 or 4 or even 5 credit cards going on for them, that it might become difficult for them to keep a track of these expenses. Now, if you try to understand why that is the case in the US, the simple answer is that US tries to promote something called as consumeristic culture, where people thrive on buying more and more and more and more stuff. Now, this is very unlike India or the India that I have grown up in. Now, according to a Mint survey, 55% of working Indians save more money towards retirement regularly. On the other hand, a 2019 CNBC survey states that only 10% Americans are confident that they will have enough for retirement. Now, this is a massive, massive finding in the sense that, hey, we as Indians, we might not be super rich, but we have the habit of saving. We have the habit of keeping a little bit of money in the emergency fund. We spend whatever we have saved. That is the type of environment that we have grown up in, that we save first and spend later. And there is nothing wrong with that culture. Now, if you move the cultural needle of India, where we are moving people from the habit of saving first and then spending, rather than nudging them towards spending more and more and more, this is a multi-billion-dollar opportunity for big credit card companies. Now, again, I'll pause here and request you to like this video, because this is an argument that many people would not be making on the internet. And this is a very tough thing for me to do also, to go up against these credit card companies. So please like and support if you love this video. I know that this video is going to get a lot of hate and dislikes as well, but I'm really relying on people who support the other end of the argument as well. Now, just to conclude this point, you must ask yourself that what are the items for which credit card companies give you loans for? So most likely you are taking loans or you're paying your EMIs on stuff like buying an iPhone, or buying an Apple product, or buying something which is a durable good. This is in majority of your spend goes here, right? I'm not saying that you will not buy fruits and vegetables from your credit card. That is okay, but that is one side of the argument. But your majority of the spend, the majority of the EMI would actually go on buying these durable liabilities. For example, when you buy a phone or when you buy a car, what ends up happening is that you can't resell it, right? So it's a liability. It's not an asset. It's not helping you make money. But your outflow of money happens and you're taking a loan to buy such products which are creating more liabilities for you. On a very quick note, I just want to touch upon the difference between credit cards in India and the US. In the US, the system is there, right? The way people spend money via the credit card, the entire economy is floating on credit. And that is something that is a point for criticism about the US economy. Such a culture should not be brought into India, where people already have a good habit of saving money first and then spending it later. I must also point out that in case you miss paying your credit card bill, then you can incur massive interest rates which can derail your credit history as well. So in short, be very cognizant about what type of spending you are taking via your credit card, and if there is a way for you to avoid it altogether, that would be the best way forward as per my understanding. Now, the third point that I want to talk about is that many people say that, hey Akshat, I am an effective credit card user and I pay my credit card bills on time. I am wonderful in terms of how I spend. So as I said at the start of the video, that this video is not a criticism about your spending habits. If you're using your credit card effectively, congratulations, you're 1 in 1,000. But I have a more systemic question for you. And the question is this. So my question to you is that who pays for credit card conveniences, right? So let me explain the business model very, very quickly. So the business model goes something like this, that you have credit card companies, right? Somewhere in the middle. There are retailers or people who sell you stuff, right? So these are called as retailers, right? For example, this could be your Apple iPhone store. And on the other hand, you have people, right? Now, credit card companies offer conveniences to retailers and credit card companies offer conveniences to people. How? So let's understand from people's side first. So on people's side, you get the convenience of not carrying cash. You get the convenience of just paying your bill via swipe of a credit card. You have customer care service if something goes wrong, so on and so forth. So there are a lot of conveniences that credit card companies are offering to these people, right? With me till here. On the flip side, retailers also get a lot of conveniences from credit card companies. For example, they have a point of sale device. Credit card companies also run a lot of discounts. They help build marketing awareness for these retailers. Bunch of different convenience options. So my question to you is, and people who support credit cards, I would want you to type out in the comments that who actually pays for all these conveniences, because credit card companies make a lot of money, right? They are making a lot of money, but who is paying them? It's either you who is paying them, or it's either retailers, or it's a combination of both retailer plus people, right? Who is paying that? In economic terms, this is called as incidence of cost burden. For example, you might have heard of a case that when cigarette prices, right? Cigarette prices goes up, then who pays for that cost rise? It's mostly people who smoke cigarettes. That is obvious, right? The reason why that happens is that this is a type of a good which is habit oriented. That cigarette is something that chain smokers would continue to smoke. The retailers can pass on the entire cost burden onto the customers because cigarette has inelastic demand. Now on the flip side, if you are buying potatoes, right, and if the tax on potatoes go up, then would retailers carry some burden on their own? The answer is yes. They will carry some burden on their own and there will be a split. For example, if the potato prices are going up by 10 rupees a kg, then retailers will absorb 5 rupee cost increase and will pass on only 5 rupees cost increase to the customers, because this has a slightly more flexible demand, in the sense that as a customer, instead of buying potatoes, you can buy some other vegetables, right, and cook your food. So same issues happens with credit card companies, that credit card companies are the ones making money, but who is substituting them, right? So you need to really ask that question. So it's a combination of both people who are using the credit cards and the retailers who are substituting the cost or making credit card companies richer, because they are getting more conveniences and these people are also getting some conveniences. So now let's move on to the next point. Now the fourth point about credit card you should know is that, hey Akshat, I'm reading a lot that, hey, credit cards are wonderful. I'm watching so many YouTubers who say excellent things about credit cards and why we should be using it. So please understand this, that number one, majority of the research that would come out, if it is against credit card companies, it will get killed. You will not find too many articles on the internet that would systematically criticize credit cards. Even this video might go down. So please like and comment on this video if you support this type of content. That would really mean a lot to me and it would allow people to witness other side of the argument of credit card economy as well. So in response to fourth point, that a lot of people are telling me that credit card is really good. I can buy a free iPhone by using my credit points. You need to understand a few systematic things. Number one, there is a lot of positive commentary in forms of articles, blogs, YouTube videos, which will be sponsored, etc. by credit card companies, and people have a biased incentive to give you their viewpoint on the usefulness of the credit cards. That is point one. Number two, people sometimes assume credit card as credit card and they lump all the nations together. For example, they would assume that the credit card economy works very similarly in India and it works very similarly in the US. In the US, it's not very easy to haggle or bargain, right? So let me tell you another story. For example, you are seeing this laptop, right? When I bought this laptop, it was costing me 92,000 INR. So I went to the Apple showroom and I was trying to bargain for this particular laptop. And the salesperson told me that, hey, if you have this bank's credit card, we will give you a 5,000 rupee cashback. Now, it was a big deal. I was losing out on that deal. I told him that, you know what, I don't want that. What is the another best offer you can give me? He told me that, hey, we'll give you like these couple of goodies. I said no, right? I kept on bargaining and he eventually brought down the price for that particular product at an Apple sales store and it approximately costed me the same amount of money. So the point is that in India, this bargaining culture works. And honestly, sometimes you don't even need cashbacks or discounts. You can actually go and bargain and command the same price. A lot of people make the argument that we buy fruits and vegetables from this big supermart, which accepts credit card and it gives us store discounts and whatnot. Now again, ask yourself a simple question, that if you go to a normal vendor, a normal vegetable vendor, will you get cheaper vegetables with no cashback, or would you buy exorbitantly priced vegetables at mega retail marts which are giving you cashbacks? So you need to do this simple analysis and use basic common sense, because as it turns out, simplicity is the best way of being financially free. So the more you complicate your life in terms of doing all these financial hooplas, it can actually mess up your life very badly from that perspective. Now this brings us to the fifth and final point of this video, which is about the argument around the credit history. Now in India, you have something called as CIBIL score, CIBIL score, which indicates the credit worthiness of a person. Now let us understand this point more, because many of the people who use credit card frequently, their biggest argument is that, hey, in order to build your credit history, you need to use credit cards. So I own multiple commercial properties for which I have procured loans from different banks and my CIBIL score is still very high. So how is that the case? The case is very simple, that honestly, if you look at the semantics of the CIBIL score, you will realize that CIBIL score simply indicates whether you have the ability to pay back the money. Now, if I have a large chunk of money sitting in my bank account, my bank manager keeps calling me and he keeps offering me more and more loans without worrying about the fact that whether I have the ability to repay. As long as I have the ability to repay, my CIBIL score will be fine. So this entire argument that, hey, you need to have a credit card in order to build a good credit history, it's pointless, right? So please don't believe in that narrative. CIBIL score is determined by your ability to repay the loans that you're taking. In fact, on the flip side, if you forget to repay your credit card bill in any month, it will actually hurt your credit history. So that is pillar one. Pillar two here is that a lot of people make an argument that, hey, Akshat, what if an emergency expense comes? For example, if someone from my family gets hospitalized, if I have a credit card, I can procure the cashless facility. Otherwise, it will create a lot of issues. I agree. That is the reason why you should plan your finances and stock some money in something called as emergency funds, right? So that is very important thing to do. Now, several credit card users, they just give up on their entire emergency fund and start using credit card, assuming that, you know what, when the dire situation comes, we can always use our credit card. That might be true, but that does not make the utility of a credit card positive. You, in the first instance itself, should have bought an insurance, should have had a little bit of emergency fund in place to meet these kind of emergency expenses. In conclusion, I will leave you with a very powerful statement to understand personal finance, that money is more about psychology than the finance itself. I'll repeat this, that money is more about psychology than the finance itself. If you have the psychology where you can control your spending urges, you do not believe in a consumeristic culture where you believe that investing is more important than undertaking discretionary spends, you will live a financially more healthy life. So I wish you the best. I hope you took something good from this video. So please like, comment and subscribe. That would mean a lot to me, and I will see you on the next video.